Well, I think that capital markets has been soft in the last quarter, and that has impacted some financial institutions more than others. But generally, the economy is still good. We're seeing good numbers. Everybody's been speaking for a couple of years now about, the impending economic slowdown, and for sure everybody's getting ready for it. But numbers, as we speak, still are very strong. For us, this has been a tough year for financials, but a lot of strategic wins during the year as well. And I'm really looking forward to 2020 to get some growth and profitability back in the business.
And of course, despite the fact that the profit was a little weaker than some had hoped to see, you're raising your dividend. So let's start with the decision to do that. Why is that the right thing to do right now?
I think because the board is confident in the plan. We've been investing in the business for the last couple of years. I think that in this last year, we needed to take a step back to address labor relations situations, that we needed to really come out of that with a win, and I think we did. There's nothing more strategic for me than a culture of performance, and getting to the right spot on labor relations was very important, and that's exactly what we did. It did impact growth and of course the bottom line, but that's temporary. And we're also making investments in the business, which are long-term and will, provide profitability and then growth in the next years and quarters. So, talking about things like launching LBC Digital into, Canada that we did last month, getting some really good numbers out of that, and new customers into the bank outside of Quebec since that we haven't been since 2003. I think are all good indications that the board is confident in the plan, and that's why the dividend was increased once again.
And of course, you've been saying this is an investment period, you're looking to the future, and I think you said on the call that 2020 is when you begin to see the payoff happen. What are you guiding to? What should people expect from Laurentian Bank as you say, LBC is launched, you've got your labor issues behind you, and you've still got that strong growth in the U.S.?
I think that, my main messages yesterday on the call was finally, the heavy lifting is coming to an end. This plan that we had, that we started 4 years ago, 7 years long, but we knew that the first 4 were going to be more heavy lifting with a lot of different initiatives happening at the same time. Changing out our core banking engine for a bank of our size is a great endeavor, and this is 3/4 of the way done. It will be done by the end of the year. What we're doing on digital is also a great investment. Being able to work on customer experience for our clients is also something very strong. So this next 2020, what I guided to is that financially should be better than 2019, but really setting us up for growth and profitability once all of the investments are behind us, which should happen at the end of the year.
We are seeing some of the other banks, BMO making layoffs and taking a big restructuring charge, TD taking a big restructuring charge. Just in terms of what the other banks are doing, does it make it a little easier for you to sell to your shareholders that you've been making these investments and the payoff is upon you?
I think yes. For the first couple of years of the plan, some people were looking at what we were doing and saying, well, is this too fast? Merging branches, changing the model, etc. I think that what we've been doing over the past 4 years is also things that other banks are looking at doing or doing right now, because the world is changing. Customers are moving to mobile, and we need to change how we deal with customers to focus on advice, focus on being good bankers for our customers, focus on the experience that they have with us, and focus less on just looking at the immediate of what to do with our people. I think that focusing on that relationship with customers is job one. So I'm really happy with the progress that we were making on this, and I'm seeing that others are doing the same in different respects across the industry.
Tell me about your U.S. commercial business. I know that was an area of growth for you. What are you expecting in the year ahead?
I think more of the same. I think that the economy is strong, and I think that we own a strong niche in the U.S. We're the 3rd largest inventory finance provider in North America. I think this business that we bought is very solid and is going to continue to see some growth. We're making some investments. They've outgrew their current location, so we're going to move them so that they can have more people. I think all in all, we're really looking for some more success on that side.
We did see when John Deere reported recently that there was some kind of tariff ripple effect on its financing business. It had seen some of its customers in certain parts of the equipment business slow down. Are you unaffected by that because you're more on the recreational side?
We have multiple business lines from motorsports, boating, RV. And this is, of course, right in line with our general philosophy of being diversified when we run businesses. To date,